Hey guys, we know that we are running a little bit late, but we want to just go ahead and get started. Yeah, technical difficulties.
How it always is.
It's how it always is. We are just waiting for Arnold Martin of Silverton Mortgage to join us soon. Yeah, so that's what's going on right now.
And I think in the meanwhile, also to kind of level set, we have been bringing everyone a series of different issues that we have been hearing personally from a lot of our clients and also from the community. And people have questions and people say, wow, you guys have some really interesting topics, but you're realtors. And I said, exactly. So this is not our lane. This is not our specialty. So we bring on the experts to answer your questions, because we know that in this time, a lot of people are at their computers and a lot of people are looking at things online. And we want to make sure that you get the latest and most current information.
Absolutely. So again, we kind of see that he's trying to get on. This is so crazy. It's kind of funny because we've been using this platform a lot because, we're not sheltering in place in the same place. And, we do our weekly videos. And as Nasya said, we have lots of content. If you missed our conversation with the probate attorney, it was awesome. So that's on our Facebook Les Maisons page. So we have Mr. Martin here. I'm going to add him. Hey!
Hi, we are live.
We are live.
Sorry about that. Literally, I was saying that I was sitting there ready to get on the call, and all of a sudden my internet just went bloop.
I mean, it happens. I'm, at home. And we have, several people here. Everyone is on the, there's two smart TV, several smart TVs. And there's, everyone has a tablet and a laptop on Wi-Fi and their phone. So, yeah, our internet is struggling.
It's struggling. Well, the thing about it was I literally came to my office for that very reason, because I got 4 people in the house, 2 college kids that are taking classes, doing Zoom calls, everything. So the internet is at a snail's pace. I'm the only one in my office right now. And literally, I was teed up. I, made sure my mic, everything was good. And then I go get it, it just started spooling. It's still spooling on my laptop. I don't know. I'm just going to get out of it.
Wow.
Well, this is still great.
Yeah.
We can see you clearly, and we're still going to be able to talk about stuff that we know that people are extremely interested in.
Absolutely. I mean, just again, I'm sorry. I don't have a tripod or anything like that, so I'm just going to try to keep my phone steady.
Okay.
And,
okay. For that way, we won't drag this out there.
Right.
It's fine.
We have a lender with nerves of steel to be able to hold that camera, no problem. So I know Kristin usually kind of kicks this off too, but I'll just go ahead and say that thanks a lot for joining us. And we are, obviously this is a really challenging time for a lot of people, and a lot of people are finding themselves without steady employment right now. And we wanted to make sure that we covered this topic because a lot of people have been asking us, well, right now, I don't want to talk to anybody in particular. Maybe I feel a little bit apprehensive about going to somebody, but I really want to get to know what are my options if I have issues paying my mortgage during this time. And it might not even be this month, but maybe it's next month going down the line. What are the options and the tools that are available to me?
Absolutely. So there wasn't a federal mandate, but it was highly suggested when the relief package was put together by Congress. that it was highly suggested to mortgage companies, credit card companies, automotive lenders, to really try to work with their patrons, their clients, and those that they were doing business with, because, they just know that so many people are out of work. We are now up to almost 22 million people that have filed for unemployment in the last 30 days, which is just unbelievable. That amount exceeds the Great Depression in the 1920s. So when you put it in perspective like that, it is huge. So mostly every lender that I've heard of so far, mortgage company and automotive, and we can speak to both, and even credit card and home insurance, are all in many ways doing something. So I'll break it down for you in terms of what I know and then kind of my recommendations. First thing that I would say is that every servicer of your mortgage, of your credit card, of your home insurance has their own guidelines. So don't just take it as general, like, well, I spoke to my friend and that's what their company is going to do, so mine will do the same. Everyone has their own guidelines and criteria that they're setting. So for mortgage, the recommendation, first of all, is call your mortgage company. Most likely they have what they're calling a forbearance program set up, and it will allow you to essentially suspend making your mortgage payments. Typically, most companies are doing between 2 and 3 months of suspending your mortgage payment. And so what that occurs is it is called a forbearance. Many of the companies are saying this, is that at the end of 3 months, if let's just say it is 3 months that you agree upon, at the end of 3 months, we will revisit that with you. If you have the money to pay those 3 months that you did not make a payment, we will gladly accept it and would like it. However, obviously the reason why you got into that agreement is because most likely you were having financial troubles. So if you didn't have it 90 days ago before, most likely you're not going to have it 90 days forward. So they're essentially then most likely going to be working with you as a modification. And so be aware, and this is the piece that people do need to understand, is that it's not like those payments magically go away. Typically what they're going to do is they're going to give you some options to pay those 2 or 3 months back. First option is to take, let's just say it is 3 months, and take those payments and spread that out over, let's just say 6 to 12 months, and adding that to your regular mortgage payment. So if your mortgage payment is $1,500, okay, and you owe $3,600, they would then say, okay, we'll take an extra $300 and add that to your payment. And so now you make a payment of $1,800 to us for the next 12 months to pay that money back. That's one option, and that's just an example. The next option, as I said, is just paying it off in full, and doing it that way. The most common option, most likely, and again, I'm speaking speculatively, is going to be where they will add those 2 or 3 months of payments to the back end of your loan. And so either, again, adding it to the balance, but not necessarily changing your terms of your loan, but basically adding it to the balance of your loan. So your loan may not pay off on either with the exact amount, and that could possibly, be when you thought it was going to pay off. If you stayed in that loan for 30 years, that money essentially would be due at that time. Or obviously, if you sell your house before then, they would just be added to the payoff. So from a mortgage standpoint, they're definitely giving you options. It's not something that you have to take. I highly recommend to people, and have been, because I've been getting the same calls, that you call your lender now, understand what the terms are, even if you don't feel that you need to take them today.
Right.
You at least know what your options are, versus waiting to the last minute, you're not sure, and then things seem to be getting better, but let's just say they didn't, and all of a sudden there's a mad rush to wanting to do this. Now all of a sudden there could be a waiting list, all kinds of things. So I recommend that you do that. And then next on the automotive side, most auto lenders are doing a similar format, suspending your payment from 60 days, and some of the larger companies, the big threes, are doing up to 6 months of payment that they are suspending. Yeah, I've heard that Ford was doing something similar, GM, et cetera. But again, you want to call your particular lender and find out. But it's kind of the same thing. It's not free money. They are going to get theirs, but it is a matter of giving you just a breather if by chance you're being furloughed, you've lost your job, etc.
Okay, so I guess my question is just, that was fantastic information, but we've been hearing the words deferment and forbearance. So in terms of what you discussed, what would be those kind of definitions for those terms? Deferment, forbearance.
Deferment is literally what it is saying is that you're deferring your payment to a later time. I use the term suspend, but defer. So you're deferring your payment to a later time, and where you then pick that up. And then once again, as I said, as the example of making those payments, spreading them out or adding them to your existing payment. A forbearance is going to be essentially taking a look at your whole financial picture. May be adding on to the back end of the loan or something to that effect. So they are similar, but not exact same terminology. But in the end, the outcome overall is the same. And the big factor that I'm telling people is, first of all, make sure that you're talking directly to your lender. Don't go. People are getting scammed, and they're getting emails and text messages saying, "Hey, we see that you're with Bank of America and we're offering this. Just give us your information and we'll go ahead and suspend your payments." You make that phone call directly. And then the biggest factor that I'm telling people to do is get it in writing, whether it's on their website or they email you, that this is not going to affect your credit.
That was one of our questions.
That I had, because everybody's very, very worried that this is going to impact their credit in some way, and just to have some kind of reassurance that it won't impact your credit. Is it up to really the different companies for them to decide, or is this across the board?
In the end, it is up to the company. However, across the board, the whole purpose of it is not to penalize you based upon the situation, but to go ahead and say, we understand, and therefore we are going to work with you. I am just a believer, based upon the economic downturn that we entered in the late 2000s, 2009, 2010, all kinds of scenarios were occurring. And the people that had as much documentation in writing were those who fared the best, meaning that, they were told, no, don't worry about it. This is not going to affect your credit. And then all of a sudden they see something on their credit later and they go back and say, well, you said, and they're like, well, no, I don't quite remember, this is what we explained. So I highly recommend that if you can get it in writing, do a snapshot of their website. If it's on their website, keep that, store that. Get them to send you an email stating that, great, you've entered this will not impact your credit, but that should be a question that you ask, and then follow up with definitely getting some sort of proof of that in writing. If you get that, then and again, the intent of these programs is not to penalize you by taking advantage of it, but just kind of working within the system. And therefore, so if a person entered into this, and then we, as a mortgage company, were looking at you 6 months from now, you wanted to buy a home, we're not going to penalize you because of the fact that you didn't make 2 or 3 payments on your mortgage, because it was part of it. And therefore, we are not penalizing people as well.
Okay, awesome. So let's see, you had the credit question, so that was answered. In terms of other options, I know a lot of people are asking about refinancing. So
Yes.
I know right before this happened, rates were, really, kind of great. Yeah. So how's that as an option refinancing right now?
The market is definitely calming down. And it is, if I could show, yesterday we received a graph of the bond market, and literally it was in the same trend line, up and down, like a caterpillar, a curved caterpillar. And our person from our pricing department literally got an image of a caterpillar, and it was almost identical. The one where it was like curved, it went up, and then it went, down, and a slight head in the front. That's how erratic it has been during the day. We call it the intraday pricing. But overall, in the last, I'd say, week and a half, rates have been slowly improving or flattening a bit. Okay. As we talked about last week, one of the challenges, once again, is always that a lot of the lenders right now are really having challenges financially. And so they are having to increase their minimum credit score for FHA and VA loans. Some have gone up to 640, 660. Again, quite frankly, Silverton has dropped its score down to 600. And one of my loan officers was very excited because someone had a mid 600 credit score, and they priced it out, and the interest rate was at 2.75% on a 30-year fix.
Wow.
Wow.
Serious, 2.75%, and it did cost like one discount point, but the client was very, very happy to pay that because it's less than 3% for a 30-year fix. So we are getting a lot of calls from people that started out with other lenders, but now those other lenders can't service them, and that's part of. You're going to start to see who is very financially sound and who's not, and typically those, quite frankly, who are having to raise their rates extremely high just to stay in the game are those that the cracks are deepening and widening. And hopefully, they are able to survive it, but that is one of the challenges.
I think that's important to hear too, because we've been hearing some of the larger banks, obviously they've raised their credit ratings, and then it's,
and down payment requirements too.
Down. Right. That changes things for a lot of buyers. So it is good to hear that there are still institutions that are out there that they do have options where they're not looking at putting down 20%, which for some people is just not within their means, and especially not during this time. So that is a really great thing to talk about, because we want to reassure buyers this is a challenging time. However, there are people who are still buying homes out there. We're still selling homes and closing. And so we know that people need to be in homes, and there are still institutions out there that can give them a competitive rate.
Absolutely. And so a couple of things. One, I didn't want to get away from your initial question regarding refinancing. Okay. And then I'll get back to kind of the market. But, as we talked about before with refinancing, rates are definitely dropping. So we're getting more calls for refinancing. But again, because I've been in this business for over 20 years, I've seen a little bit of everything. And one of the things that I'm having the conversation with people about is their whole financial picture, and their mortgage, can be used as part of this as a security measure. And that is, so a lot of people are refinancing and pulling cash out because in the last few years, they've experienced a significant property value improvement. And so because of that, they're now saying, you know what? I don't want to dip into my 401k, even though they have reduced some of the penalties and relaxed some of them. I don't want to go in there. I don't want to mess with my IRA. Can I go ahead and do a cash out refinance and pull out $25,000, $50,000 and then just sit it in a bank account? And that's my 6 months reserve, and I don't touch it, but it's at least my safety blanket. I can still afford, the slightly higher payment, but with rates having gone down, once again, it is a great opportunity to be able to get a lower rate, pull cash out, and your payment not go up much more than what it is right now. So that's one of the things that I'm talking to people about, is saying, let's take a look at the whole picture. The other piece to this, again, going back to your question of refinancing, one of the things that people, and you're going to have different conversations all around. Some people say that this is a bad idea financially, and that is paying off your home. Many financial advisors, people in the market, et cetera, say, that is money that's just sitting there. Okay. And it's not making more money for you because it's just, you're in a paid off home. But on the other side of it, from a reality standpoint, it's also peace of mind for some people. Knowing that if you are, let's just say, in your mid to late 40s and you refinance to a 15-year loan, and you figure that you are in the home that you really want to be in, you don't want to sell, or you think it's a great house, then there are a lot of people that are saying, you know what, I'd rather know peace of mind that the roof over my head is taken care of. I don't have to worry about making a payment if I lose my job or if I have to retire early or whatever. So we're also getting calls from people who say, you know what, I would love to pay off my home by the time I'm of retirement age or by the time my kids go off to college, so that I don't have to worry about a tuition payment and a house payment and other bills. So because rates are decreasing, this is a great time to think about going with a lower term mortgage, such as a 20 or a 15-year mortgage, which usually the interest rate is better with those as well.
Awesome. This kind of reminds me of like kind of the old school way of doing things, kind of buy a home at 25, get your 30-year mortgage, and like your house is paid for before retirement. So yeah.
It really is. And I think that, again, we're all kind of realizing we may need to go back to some of our original principles and values as it relates to money and things like that. And as I said, there are plenty of people that will completely dispute, even some mortgage people that will dispute what I just said. But I like to deal with the reality of people's lives. I have seen people who are retirement age that have to now go out and get a job because their income in retirement is just not what they thought it was going to be. Right. And they have a big house payment, and that's what they're most concerned about, is the roof over their head. And so I personally, but those who I know who have their homes paid off and they're in retirement, they're traveling, they're doing all kinds of things, and they don't have that one thing that they have to worry about. So when all else fails, they at least have the roof over their head.
Absolutely.
Yeah.
Okay. Was there anything else to see that you had? Any questions? I don't see any questions.
I don't think so. I think the biggest thing I'm getting from it, obviously, is communication. Do not wait to the last minute to talk to your servicer, your loan servicer, because we don't know what's going to happen in the future. And you just want to level set and be very frank with your loan servicer. I think the more they know, the better. Just the biggest thing I would say, and I hope that you might agree with that, is don't let yourself just get behind and not say anything.
Exactly. Communication during times like this, just as you said, is critical. We always tell people in the mortgage business, we really don't want to foreclose on your home because we're not in the property management business.
Right.
So it's more costly for us to have to foreclose, have to collect, have to do all these things, versus if we understand what's going on with you, and you might as well, again, take advantage of these situations. Now, it's interesting, and again, conversely, I was online and saw that there were some mortgage people who were not recommending to people that they do the deferments or forbearances with their mortgages, and saying that because this does add interest on the back end of your loan, et cetera. But again, I'm speaking in real reality of people's lives. If you are a very wealthy person, that may not be something of an issue for you. But if you are a person like the average American that, has bills to pay, and you may, be getting laid off and whichever, the reality is giving you a 30, 60, 90-day period in which you don't have to make a mortgage payment or a car payment can be the difference between survival and not surviving in these situations.
Absolutely.
Yeah. But otherwise, overall, that's essentially what's happening in the marketplace. As I said, rates overall are beginning to flatten out. And again, for us, we're offering some amazing, rates. Down payment assistance programs are still out there and still available. Some there have some concerns about what's happening in the marketplace, but they feel like they'll be overall fine. And the only area where there are some concerns as it relates to availability of product is with the jumbo loans. Some of the jumbo investors, and that's above $510,000 for a loan amount. Some of those investors have pulled back a bit or gotten much more conservative with what they were allowing before. And now saying, you know what, you are going to have to put a huge down payment down, et cetera, in order for us to finance this for you.
Awesome.
Okay.
Thank you. So I think that's it. You've done a fantastic job of holding that phone together.
It's been interesting, but again, hopefully not too shaky.
Nerves of steel.
Yeah, so thank you so much. And in the description, we have, if you would like to have a discussion with Arnold, we have his contact information in the descriptions, as well as our information. If you have any real estate questions, general questions, please feel free to give us a call.
Yeah, please contact me with any questions at all. Thank you so much.
Awesome. Thank you.
Okay. All right. Take care.
Bye.